Welcome to the Stocks channel. Volatility is back in the stock market and we have a lot to go over tonight. My name is Cory and this is going to be your daily stock market technical analysis update. First off, we're going to take a look at the SP 500 and we're looking at the ticker symbol SPY. And remember, if this video helps you out at any point, please remember to smash that like button and subscribe to my channel to follow along with all of my updates. Alright, so with today's price action on the SPY ETF, we see the price went down minus 1.52%. And we did close below the 5 EMA as well as the 13 EMA. Now, one thing that's very important to note is we did come right down to our 0.382 Fibonacci retracement at $341. So the one thing I want you to remember is this level is very critical, and if we start closing below $341, unfortunately that will be a very bearish sign. So remember, we have that bullish trend and we know we're in a bullish trend because that 5 EMA is still trading above that 13 EMA. And we still have that positive sloping 20 simple moving average. But we could be in jeopardy of breaking this bullish trend if we continue to see downward price action. So it is bullish that we're still trading above the 20 simple moving average, but we have now dropped for 5 days in a row on the S&P 500. That is one of the longest pullbacks we've had without a bounce for a very long time, ever since the March crash. Now we can see down here that there was lower volume on today's selling, but that's still a concern that we're dropping such big amounts after we've already had a 3 or 4 day pullback that we're continuing to drop. So overall, the price action is definitely bearish, but we still do have a bullish trend that we could bounce off of this level. So this $341 level could be a very critical support level, and we need to see if we're going to bounce off of this level. Don't forget that our price targets were 350 and we did meet that price target, which sets us to our next price target in the 355 range. And there is a chance that we still have a small 5-wave Elliott wave going up here, and we could be in that 4th correction wave before we resume up and finish out our 5th wave. So it's too soon to say. We need a couple more days of price action, but it's very likely this was just a minor ABC correction to this impulsive wave 3. If we go over to a 1-hour chart, you can see that this is actually a very nice ABC structure forming, and we know that an ABC corrective structure is a correction to the impulsive direction, which we know is bullish. So if we zoom out here, we can easily see that we have higher highs and higher lows, and we are completing this sort of ABC correction pattern to that bullish trend. So it's very likely we could bounce off of the 341 level and resume upward, and that could go back into that wave 3 or start into a wave 5. So we don't want to panic sell here because there's still likelihood that we're going to bounce off of this as a support level and head back up to our price target of 350 and 355. Now you'll notice, if you're paying attention, there is a new trend line on this chart, and that's thanks to one of our community members who told me to connect the top of 1987 and 2000, and that trend line only connects at those 2 points, so it's not quite as strong of a trend line as our magenta resistance trend line, but you can see how close that purple trend line comes into the price action that we're witnessing right now. It did come very close to the magenta trend line for the high that we saw in the beginning of September, and it did go right through the wick of the high that we saw on October 12th. So we'll go ahead and add this trend line in, and it could be something to pay attention to, and that will be somewhere around the $354 level if we can get back up to that line. So remember, we could be reaching a very important level of resistance when we get back up to these trend lines, and those trend lines are also coinciding right with our price targets right around that $355 level. So while we do have bearish price action, we do still have a bullish trend, and on bullish trends, we want to look at opportunities to buy off support levels. So because $341 is our next support level, we have to wait to see if we're going to get a bounce off of this level, and that could be an opportunity to place a buy order and set a stop loss below this support level. If we can bounce off of this support level and go up to our price target, that would be an upward move of just over 4%. So there is not a lot of upside with a lot of the risk in the market right now, but that doesn't mean we can't make a trade off of this bounce if we do get a bounce off of this $341 level. So right now, to remain bullish, we need to start seeing a bounce off of this level, and we need to see that 5 EMA remain above the 13 EMA, and we want to see that 5 EMA start to trend in the bullish direction yet again. So there's definitely a lot of volatility in this market, and you want to be very smart and control your risk, and you want to set stop losses off of your support levels that you're buying off of. So just a reminder, if we do close below 341, we still do have support levels at the 20 simple moving average and the 50 EMA, as well as our support trend line. But the price action will start to be getting very bearish if we continue to close below these moving averages. So price action is always king, and we want to pay attention to what the price action is doing. And on a day like today, we see a very bearish candle, which is telling us that we have bearish price action, and we want to pay attention to that. So we really need to see a bounce soon to maintain this bullish trend, and we're going to learn a lot with tomorrow's price action. So next up, let's go ahead and take a look at the Nasdaq 100, and we are looking at the QQQ ETF. And we see the Nasdaq 100 also closing below its 13 EMA, but we still have that bullish trend with that 5 EMA still trading above the 13 EMA. You can see the 20 simple moving average and the 50 EMA are still positive sloping, so we do still have that bullish trend that we could bounce off of support levels soon and we could start heading higher. Now you can also see on the Nasdaq 100 our 0.382 Fibonacci level is also right around where we closed today, around that $283 level. So we could find support very soon off of these levels. And we also do have a support line right around $281. So we still have that bullish trend and we could find support very soon and continue to find higher price targets. So on the Nasdaq 100, our upside price targets are $296 and our previous all-time high at $302. Now switching over to a 1 hour chart, you can also see on the Nasdaq that we do have this sort of nice ABC correction pattern forming, and that could mean that the upside is going to continue soon. And as we zoom out here, you could see that we do have higher highs and higher lows on the grand scheme of this up move. And this correction could be ending off of this Fibonacci retracement level, and we could start heading back up to our upside price targets. So tomorrow looks like it's going to be very key for the SP 500 and the Nasdaq 100. So next up, let's take a look at the Dow Jones, and we're looking at the DIA ETF and see what's going on with the Dow. So on the Dow, we have another bearish price action closing below the 5 EMA and the 13 EMA. But we didn't quite take out the previous low from a couple days ago. So overall, not too bad, and our lower price target on the Dow is still not been reached at this $280 level, which is the 0.382 Fibonacci retracement of the Dow. So our upside price targets on the Dow are still up here at $289 and $292. And remember this resistance trend line, which we have to break above 291 to break out of these lower highs that we've been forming on the Dow. We have not formed a new all-time high for the year on the Dow Jones. So remember, on the Dow, we still have that bullish trend. All of the bullish trends are still intact, as we can see the 5 EMA still trading above all the moving averages, and we still have the moving averages stacked to the bull side. So this could be a great time to buy the dip, but only time will tell, because we need to see a confirmation bounce off of these support levels. So let's go ahead and check in on the VIX, which is our fear indicator, and we see volatility is back in the market because we are now trading at a VIX level of 29. If we zoom in here, you can see that the moving averages are going to the bull side, and that 5 EMA is starting to cross above all the moving averages. And we now have 3 days in a row that we're closing above the 20 simple moving average. But I do have this resistance level on the VIX of around 29.5. And you could see we did see that level act as resistance today, keeping the VIX at a lower high close for the day. So the VIX is still forming lower highs and lower lows, and it's kind of just trading sideways in this range between 29.5 and 23.5. So yes, volatility is back, but we really need to see a break and close above 29.5 on the VIX to know that the volatility is going to start getting out of control. So the number one things to watch to mitigate risk in this market is an elevated VIX is almost always going to tell us that we're going to see lower price targets, because the VIX is an indication of how much fear is in this market. We know we're trading near very important resistance levels, so if the VIX continues to go higher, that could mean that we're going to see a continuation of this selling. Now, if the VIX starts heading back down to the 23.5 level, we could easily see a resumption of that bullish trend and start into that wave 5 or a continuation of our wave 3 that we're currently in. So the VIX is going to be a very key indicator over these next couple of days. And if you're watching the VIX, you want to pay attention if we're going above that 29.5 level, or if the VIX is going to start cooling off and heading back towards 23. So let's check in on the sectors driving this market. And the first sector we're going to take a look at is the financials. And we see the financials had a bearish price action close of minus 1.52%. But closing just above that 50 EMA. Now remember, on the financials, that 20 simple moving average has not yet crossed to the bull side, and we do have a bullish short-term trend, but we need to form a new higher high and break out above this $25.52 level. So we really need to see the financials hold up above the 50 EMA and the 20 simple moving average, and we would like to see this bullish trend remain by having that 5 EMA stay above that 13 EMA and see a continuation of this up move. So we're very close to knowing, just a couple days away, if we're going to find support soon. And if the bulls want to remain in control, they need to start stepping in and buying up this dip so that we can get a bounce. Otherwise, these bullish trends are going to start reversing, and the bears are going to come in and start taking control of the market. Next up is the industrial sector, and we see industrials did go down minus 1.24% today, but overall, industrials are looking the best of all. With the price action close, we only got below the 5 EMA, and we're still trading above the 13 EMA. So industrials are still looking really good, and you can see we have daily higher highs and higher lows. So the industrials still have plenty of room to come down and find support around the $78 level, and they could easily bounce off the 13 EMA. Industrials could also just continue their upward trend starting tomorrow, and we don't really see that 4 to 5 day sell-off on the industrials that we see in the rest of the stock market. And the industrials could be a light at the end of the tunnel if this is just somewhat of a rotation and we're seeing money moving around, and we could go back into that bullish trend very soon. So overall, the industrials are looking very good, and I would look for the industrials to continue to head higher. Next up is the healthcare sector, and we see healthcare getting flushed out, going down over minus 1.58% today. And we are still closing above that 50 EMA, but we're starting to break down, and this bullish trend is in trouble. We still have that short-term bullish trend, but we need to start bouncing soon to maintain that strength on the bull side. You can see here the 20 simple moving average is starting to come up, and it looks like it wants to cross above the 50 EMA very soon. So we are still getting bullish signs in this market, but the bears are starting to make a dent on the bulls, and if they can continue this sell-off for another day or two, it could start reversing some of these bullish trends. Next up is the dollar, and this is DXY we're looking at, and we see the dollar went down today, and the stock market went down as well. So it does look like the dollar is starting to break that inverse relationship that we've seen, because we had a down day back on October 14th when we saw the stock market go lower, and now we have another day that the stock market went lower as well as the dollar. So we could be snapping that inverse relationship, and that could mean that it's not that important that the dollar goes lower if we expect to see the stock market go higher. So we'll continue to watch the dollar, but right now it does look like the dollar is weakening, and we did get rejected around the 20 simple moving average and the 50 EMA, and it looks like we're starting to resume back downward. So that's bad news for the dollar bulls, but if the dollar is getting weaker, we may be able to expect to see the stock market continue to go higher. So we're going to keep watching the dollar for that inverse relationship and see if it can remain intact. Now, if the dollar is going lower, we would expect to see gold going higher, and we didn't really see that today because gold decided to go absolutely nowhere. So gold looks like it's still in this consolidation wedge, and it looks like we still need to wait a little bit longer to see if gold can break out to the upside, break out of resistance and bounce off support, and then see if we can buy off this support level before gold goes back into a bull market. But gold could equally break out to the downside, and that's why we want to be patient, and we just want to watch and wait a little bit longer to see if we can see which direction gold's going to break before we decide to be a buyer or not. Next up is Apple, our market moving stock, and we see Apple blew right down through our gap today, so we can go ahead and delete that gap, and we see that that 117 level did not act as support. So we'll go ahead and delete that support level, and you can see we did find support right around that 20 simple moving average where the price got down, and we did close just above that 20 simple moving average. So our Fibonacci retracements on Apple were that 117 level at 0.382, and our next Fibonacci retracement below that will be this $114 level. Now we could find support at the 20 simple moving average and start bouncing from here. And if we can bounce soon and maintain this bullish trend with that 5 EMA above all the moving averages, our next price targets are still up here at $127 and $130. So the Apple bulls need to start buying up this dip, and we need to see a bounce soon. Otherwise, this bullish trend could be in jeopardy, and we could start trending downward. But it's still too soon to say the bears are in control because we still have that bullish trend, and we're trading right above critical support levels where the buyers could step in soon. Next up is Tesla, and we see Tesla with a very similar story, with the price action closing below the 5 EMA and the 13, but still trading above that 20 simple moving average. Now, the one thing to note with Tesla is earnings is in 2 days, and if you don't feel like gambling, you might not want to be trading Tesla right before earnings, because earnings could be a great news event or a terrible news event, and we could see a huge swing to the upside or the downside. So if you're not sure what to do on Tesla, your best bet is just to wait until after earnings, and let's see which direction this trend wants to resume. But right now, you can still see we're in a slight bullish trend with that 5 EMA still trading above the 13, and the price action is still trading above that 20 simple moving average. But the 20 simple moving average is kind of flat, trading sideways, so we don't know if we have that medium-term bullish strength right now, because the 20 simple moving average is not trending upward. So not the most bullish setup on Tesla, but we still do have slight bullish trending going on, and we could bounce off of the support level right around that 20 simple moving average. Next up is Bitcoin, and we see the Bitcoin bulls are still fully in control, and we see Bitcoin having a great day today, closing up back above its 5 EMA for the second day in a row. So it looks like the Bitcoin bulls are getting ready to come up here and test this $12,000 level. And the real test is going to see if the Bitcoin bulls can break 12,000 if we can get a quick run up to our next price target at $14,000. So everything's looking great on Bitcoin. You can see we have a lot of bullish momentum, and that 20 simple moving average is gaining strength and trending upward more aggressively to the upward side. and it's now trading above that 50 EMA and creating separation. So all of our moving averages and our price action are very bullish on Bitcoin, and I am looking for Bitcoin to come up and test 12,000 in the next day or two. And the real question is, are the Bitcoin bulls going to blast right through that level, or are we going to find resistance and get rejected for another attempt? So going back to the S&P 500, I want you all to be fully aware that this is a very critical resistance area around the $355 level on the S&P 500. And if you remember back on October 12th, we did get right into that area. So we cannot rule out the opportunity that we did reach another very important market top, and we're starting to see some bearish price action. However, if we can bounce off of this support level at 341 and start trending back up, that could be erased and we could go back up to those levels yet again and test them for a second time. But remember, this is a very, very strong resistance level that we're trading near. So I want you to be very smart and manage your risk. And if you're buying at these levels, make sure you're setting very tight stop losses below your support levels. Remember, volatility is back, and if we see the VIX continue to climb, we could start seeing -4 and 5% days in the stock market. And if you don't have stop losses, those can really trap you and start wiping out a lot of your profits. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.